Assalamualaikum. Welcome to my vlog. In this video, I would like to explain to you about how to manage cash, especially for petty cash and bank reconciliation. But before that, let me introduce myself to you. My name is Aulia Dinda Prasetya, and you can call me Dinda. I'm one of students of Sultan Agung Islamic University. So, without any further ado, let's get started.
How to manage cash for petty cash and bank reconciliation. Well, I want to ask you, what do you know about cash? Cash is the most liquid asset a company can own that can be used to exchange goods, debts, or services. So, how to manage cash? A company usually has cash internal system. The first one is for petty cash. Petty cash has a big role for companies' operational. It should be met the company's daily needs, since it is started to the end of the activity. A proper management is highly required to manage petty cash. Okay, I will tell you how to manage petty cash. There are two kinds of petty cash methods. The first one is impress method, which the amount of petty cash remains the same as the determined balance. And the second one is fluctuating method. The petty cash balance is not fixed, but fluctuates according to the amount of petty cash expenditure. As you can see on the screen, there is a table for impress method versus fluctuating method. The first point is, for impress method, the petty cash funds balance is fixed, while for fluctuating method, the petty cash funds balance is fluctuating. It depends on the amount of receipts and disbursements in petty cash funds. The second point is, for impress method, the expenditure of petty cash funds just recorded at replenished petty cash funds, while for fluctuating method, each expenditure must be recorded at the transaction occurred. Next, for the third point, for impress method, the function of petty cash recording is as tool of control, and it cannot be posted in general ledger. While for fluctuating method, the function of petty cash recording is as a journal. It is used to be sort of posting to each account in general ledger. And the last one is, for impress method, it is necessary to make adjusting entries for unrecorded transaction at the end of period. And the beginning of the next period must be made reversing entries. While for fluctuating method, it is not necessary to make adjusting entries. So, from my explanation, it can be concluded that for the impress method, the funds balance is always fixed. But for fluctuating methods, the petty cash funds balance is fluctuating based on how many transactions, on what kind of transaction happens at that time. And we have to make a journal for every transaction occurred in that day. Alright, I have a petty cash exercise for both impress method and fluctuating method. Ernest Company uses an impress petty cash system The fund was established on March 1 with a balance of $200. During March, the following petty cash receipts were found in the petty cash box. So, there are 5 transactions recorded on March. The first one is on 5 March for stamp inventory amounting to $76. And the second one is on 7 March for freight out amounting to $42. The third transaction is on 9 March for miscellaneous expense amounting to $22. The fourth transaction is on 11 March for travel expense amounting to $44. And the last one is on 14 March for miscellaneous expense amounting to $10. The fund was replenished on March 15 when the fund contained $6 in cash. On March 20, the amount in the fund was increased to $300. From above, the instructions journalize the entries in March that pertain to the operation of the petty cash fund. Here is the journalizing for impress method. The first journal is on March 1 when Ernest Company established the petty cash. So, the journal will be petty cash to cash amounting to $200. And the second one is on March 15. It is when Ernest Company replenished the petty cash. So the journal will be all the transaction happened in that month to cash. Stamp inventory amounting to $76, freight out amounting to $42, miscellaneous expense amounting to $22, travel expense amounting to $44, and miscellaneous expense amounting to $10, to cash amounting to the total of the transaction, $194. And the third journal is when Ernest Company increased the petty cash amounting to $300. So the journal will be petty cash to cash amounting to $100. Before, I have already explained to you the journalizing for impress method, and now I'm going to explain to you the journalizing for fluctuating method. The first journal is on March 1 when Ernest Company established the petty cash. So the journal will be petty cash to cash amounting to $200. And next, for journal on March 5, 7, 9, 11, and 14 is the journal for all the transactions happened on March. So, in fluctuating method, the journal should be prepared when the transaction happened. For example, on March 5, Ernest Company has to pay for stamp inventory. So, the journal will be stamp inventory to petty cash amounting to $76. US dollar. And March 7, the journal for freight out to petty cash amounting to 42 US dollar. So, for fluctuating method, the journal will be like chronological transactions. It will be journaled when the transaction happened in that day. Okay, next is for March 15. It is when Ernest Company replenished the petty cash to 200 US dollar. So, the journal will be petty cash to cash amounting to 194 US dollar. And then, on March 20, Ernest Company increased the petty cash amounting to 300 US dollar. So, the journal will be petty cash to cash amounting to 100 US dollar. The second cash internal system is bank reconciliation. The process describes the difference between bank balance shown in the business's bank statement on a specified date. Why is bank reconciliation necessary? Bank reconciliation is needed to, first, to find out the cash balance difference from the bank records with different cash balances on company's book. And the second one is to find out the causes of the difference in cash balance on bank and company records. How to prepare a bank reconciliation? For preparing a bank reconciliation, you need to do these things. The first one is cash debit account compared to the credit in bank statement in receiving column. And the second one is cash credit account compared to the debit in bank statement as stated in the expenditure column in bank report. Why is there any balance difference between records and bank statement? The difference is caused by following statements. The first one is the transaction which is recorded as revenue by a company has not been recorded by bank. Next, the transaction that has been recorded as revenue by bank has not been recorded by the company. And the last one is the transaction recorded by the bank as expense has not been recorded by the company. To make it clear, I give you an example from Robert's Company bank reconciliation. On the left side is as per bank statement, and on the right side is as per books of Robert's Company. So as you see on the left side, there is deposit in transit as amount that added to bank balance. What is deposit in transit? This is when the company deposited some money to bank, but bank not yet recorded. So bank needs to add deposit in transit to their account. And then the amount that decreased bank balance is outstanding check. It is when the company issued check. Company has already recorded in their book, but bank not yet recorded because bank will know how much check issued by the company only when the receiver withdraw the money to bank. So, bank needs to decrease the amount to their account. So, we will know the adjusted cash balance. So, what happened with company? We will see in here. There is balance as per books of Robert's company. It is aided by bank interest. Why? Because Robert's company only know the bank interest when they receive the bank statement. So, they need to add bank interest to their account. And then, Robert's company also only know the bank charge if they receive the bank statement from the bank. So, Robert's company needs to decrease bank charge to their account. In the end, we will find the adjusted cash balance. Exercise bank reconciliation. Robert's company is closing its books for the month of December 2020 and must prepare a bank reconciliation for the following transactions. A. Bank statement contains an ending balance of $300,000 on November 30, 2020, whereas the company's ledger shows an ending balance of $260,900. B. Bank charge amounting to $100 not recorded in Robert's company's book. C. Interest income December 2020 has not counted yet in Robert's company's book amounting to $20. D. Robert's company issued check amounting to $50,000 which have not cleared yet by bank. E. Robert's company deposited $20,000 and not yet appear in bank statement. F. A check amounting to $470 issued to the supplier was recorded incorrectly in the journal amounting to $370. G. A note receivable amounting to $9,800 was collected by bank. H. A check amounting to $520 deposited by the company has been charged back as non-sufficient check. Alright, so we will do a bank reconciliation for Robert's company. I will explain from the bank side first. So in here, we already know that the cash balance as per bank statement on November 30, 2020 is amounting to $300,000 and then added by deposit in transit amounting to $20,000. This is the amount that the company has already deposited to bank, but the bank not yet recorded. So we need to add the deposit in transit to bank balance. And then next is for the outstanding checks. So company has recorded the outstanding checks amounting to $50,000, but bank not yet recorded, so we need to deduct it. And finally, we find adjusted cash balance amounting to $270,000. Let's see from Roberts Company's record. Balance as per Roberts Company's record on November 30, 2020 is amounting to $260,900. What kind of transaction that can be added to Roberts Company's record? The first one is note receivable collected by bank amounting to $9,800. At that time, bank has already collected note receivable, but Roberts Company not yet recorded. So Roberts Company need to add it to their account. And the second one is interest income. Roberts Company only know the amount of interest income when they receive a bank statement. So Roberts Company needs to adjust it to their account by added amounting to $20. And then for transaction that can be deducted from Roberts Company's record, the first one is non-sufficient check amounting to $520, and the second one is the same treatment as interest income, which is bank charge, should be deducted from Roberts Company records amounting to $100. And the last one is correction towards check amount. In this case, Roberts Company has already recorded amounting to $370, but it is supposed to be $470. So Roberts Company needs to deduct it from their account amounting to $100. Finally, we find out the adjusted cash balance amounting to $270,000. So we have found the correct balance between bank and Roberts Company's record. After we reconcile the balance cash between bank statement and Roberts Company's record, don't forget to prepare the journal. The journal that we prepare is only from the Roberts Company's record. So the first journal will be cash to notes receivable amounting to $9,800. It is to record notes receivable collected by bank. And the second one is cash to interest income amounting to $100. It is to record the interest income December 2020. The third is account receivable to cash amounting to $520 to adjust non-sufficient check. And the third journal is bank charge to cash amounting to $100 to record bank charge December 2020. And the last one is account payable to cash amounting to $100 to record correction towards check amount. So that's all the journal that we can prepare after we do bank reconciliation. So it is time for me to say goodbye. What do you think? Isn't it easy for you? I have already explained about petty cash and bank reconciliation, but if you still have any questions regarding with petty cash and bank reconciliation, please leave your comments down below. And if you think that this video is helpful for you, don't forget to like and share to your friends. And also please subscribe this channel. Okay, thank you. Goodbye. Wassalamualaikum warahmatullahi wabarakatuh.